Bonjour à tous, j'espère que vous allez bien. On va commencer directement aujourd'hui avec un sujet très très important. C'est c'est ce qu'a dit déjà hier le patron de la Fed euh, au sujet de XRP. Euh, alors,
Betsy Stevenson, professor of public policy and economics at the University of Michigan.
Our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. Both sides of our mandate. A couple of things have happened. We've gotten more strong data, but we've also seen
to be that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So, in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So,
are often the ones that have a strong
of assumptions about what might happen, but they're really kind
of the labor market in the statement today. Would you say that that's even more so than
not be in a hurry to make further. Do like to raise prices, but we also hear a lot from companies these days that's just a really good.
It's from your career, or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today.
We took out a reference to since earlier in the year as it related to the labor market, and we just chose to shorten that sentence. Again, if